Okay, we're live, aren't we? My goodness, that went quicker than I thought. Welcome back, investors, to Ticker Time News. I'm Adam, and today, let's kick off the show with Bitcoin. If you're a long-term investor and you want to be in crypto, my suggestion would be to stick to royalty. That means Bitcoin and Ethereum, they're the two kings on the block, right? Or kings and queen on the block. You get my drift there. They're the best, right? If you want to do other type of cryptocurrencies, then you definitely have to. It's a must. Do your own due diligence and look into those coins. Some of them, they're not going to work out, right? Just like any startup in the world, any technology startup, not everyone becomes a Google, right? Same thing with the cryptocurrencies. Not everyone is going to become a Bitcoin or Ethereum. So stick to those two and you'll be a lot safer. Also, when it comes to brokerages, I can't personally say which one you should use. Just do your own due diligence. But names like FTX and Coinbase, they've been in the business for a while. And maybe if you're leaning towards a brokerage to trade crypto, maybe one of those two might fit what you're looking for. Then again, maybe you want it Robinhood, something real simple that is old school, that is super simple to use. There's a lot of options out there. Just be careful with the newer ones, right? Ease into them. If you think they're doing good, you think their background's okay, ease into it. Don't put your life savings out there on one exchange that is new. Test the waters. Put a little bit out there. Maybe try another exchange. You just have to do your due diligence, do your research, be honest with yourself about it, and don't dive in head first. It's a new area, cryptocurrency. So just be safe and just treat it like any other investment. Research, find what works, and go with that. Okay, this site right here that I have on the screen right here, it is called lookintobitcoin.com. All one word, lookintobitcoin.com. And as a matter of fact, I'm going to just take the URL here. I'll put it in the live chat. There are tons of tools on this site that you can use, okay? Tons of tools, real-time charts to help you, whether you're trading Bitcoin or investing in Bitcoin. And this particular chart right here is for long-term investors to show you it doesn't matter whether you buy at 20,000 or 15,000, because over enough time, that spread becomes irrelevant. What do you think? Let's look at this chart real quick. I see your questions in the comments. I will get to Tesla right after this one. Bitcoin. This is Bitcoin Investor Tool. It is the 2-year moving average multiplier. So the bottom green line on the chart, that is Bitcoin's 2-year moving average. The black line that's going up and down and up and down and up, that is Bitcoin's actual price. Then the red line is, to keep it short, the formula that they use is right here on the website. It's right underneath the header right here. It is a multiplier 5 times from the green line, right? So it shows you on the red line, when price gets outside of that, that is a great time to take profits and sell. And then when it dips down below the green line, those have historically been great places to buy. And it's happened 4 times. It happened back here in 2011, the end of the year of 2011. Bitcoin was $2. Bitcoin was $2 in 2011. And then it happened here. This was a wide patch right here. This was a big crypto winner right here. In 2015, Bitcoin was $290 there. And then the third time was up here. This is 2019. Bitcoin was $36.40 at that point. And the fourth was briefly in 2020, and Bitcoin dipped down to 5,000. Now, Bitcoin is currently below the green 2-year moving average. So if we look at the past few years here with Bitcoin, this goes all the way back to, what's the very first date here? August of 2010, okay? So since Bitcoin has been around, there have been 4 buying opportunities like we have right now today for Bitcoin. And if you would have bought during those 4 different times, you would have been okay. You would be in the green with Bitcoin right now. As a matter of fact, for you to potentially turn negative in your holding, Bitcoin would actually have to go down below $7,000 a coin. And I don't see that happening. As a matter of fact, when we go look at Bitcoin, BTC, USD on TradingView, and I always use Coinbase for the data, which is your second option. And remember, you can chart at home. There is a link in the description to TradingView. Click on it, sign up. Doesn't cost you a penny, and you can chart right along with us. Now, for Bitcoin here, I've got this target down here. It is the red box at the bottom. The top of it is 20,000. The bottom of the box is 16,000. That's where I think Bitcoin could hang out, build a base to launch off during the next halving cycle. So Bitcoin is in that area right now. It's actually above that area. It's 21,683. So it has popped up above that. So that's my kind of target area for where Bitcoin's going. And then if you look historically at how Bitcoin has acted over the past, then you can see that these big pullbacks below that 2-year average end up being awesome buying opportunities. And when you're looking at Bitcoin in its future and where it could be going, does a difference of $4,000 spread between the top and bottom of this box, does it really matter? That's just the point I'm trying to get across. All right, let me pull up Tesla real quick, and then we got Matterport that I want to talk about. TSLA for Tesla. Tesla had a great day today. They were up real nice today. Earnings for Tesla is 13 days away. There are a couple of signs that say to me, well, you know what? Tesla and their earnings that are coming up in 13 days, we could have something very, very interesting on our hands. I think Tesla could have a real good quarter, and I think the quarter could be a bit of a surprise. I think analysts are probably starting to think that, well, with China having been locked down, well, that's going to affect, production and deliveries for Tesla out of its Shanghai facility. And yes, that is true. However, there seem to be some reports that say that, you know what, maybe things aren't as bad as they're going to be. So I'm a believer in Tesla. Right now, I think Tesla is trying to build a bit of a base. And let's look here. For me, $550 a share. That's what I'm watching for, and that's what I'm waiting for. That would be a big buying opportunity for myself personally, and that's what I'm looking for. But Tesla right now is building this base, what appears to be right about $648 a share being the top of that zone, and the bottom of that zone being right around $602 a share. Now, if I highlight or circle that zone there for you, it's right in here, okay? It's right in this zone right here. Tesla dips down in there every time. It pops back up, at least going back to when it first popped in it recently, back in May or on May the 18th of this year. That's when it first dipped below that $648 a share. That looks to me like a base is being built. You also have what seems to be like a double bottom occurring right here too. Maybe a triple one right here, possibly. We'll have to wait and see on that one. But earnings could play a big role in what Tesla is going to do, whether it's going to move higher or lower. Now, something else to point out here for Tesla at this $648 a share area here. If we go back here, let me do this. I want to move this highlighted area because we went through this the other day talking about the different places that Tesla should find support and resistance. And that's why all these highlighted areas are on here. However, to show you, to make sure that we're clear on this, I want to get them out of here so I can then add them again. So at that 648, 650 area, there were a lot of reactions right here on that line. And then again, back here, a lot of reactions. And then here, a lot of reactions. And then on the flip side, the bottom side of that zone, there were a lot of reactions for support back testing here at about the 550, 555 area. That's why I'm really waiting for that 550 area. 3 different spots right back here that show there is that chance that Tesla could get to 555, 550. And boy, that would be beautiful if it did. But right now, it's holding up in this zone, 648, 650-ish, all the way down to 602. So that would be my mark there. So entry point for Tesla, anywhere in that zone right now is looking to be good. Personally, I'm waiting for it to pull back to 550. All right, moving on. Entry point. How about right here? I would like to get your insight on Calix. All right, let's pull that up here. CALX, and we'll look at the chart and see what we got. All right, so very bearish setup, obviously. So we've got our pullback zone looking like that. So we're definitely in a bearish territory. And you could probably line up a maybe a potential support line, potentially like this. And then if, well, sorry, let's get that on there again. Potential support area right about there. And then let me remove that highlighted area. We definitely know it's in a bearish setup. If we go from here and we run it like this, you can see a bit of a wedge there for it. Let's zoom in a little bit closer here. Volume is real light on this. So with this breakout that we have here, there's a couple areas that we want to make sure we are watching. So the first breakout area obviously is right along the top resistance area on this wedge here. The next area that is going to be potentially resistance is right where it's at now, because it lines up with these tops that were made back here in June. Let's call it June 1st all the way through June 9th. That's where it has lined up with right now. So breaking above that area, and it looks like it's a $39 to $40 range, just a couple dollar range in there that it needs to break above. The next area for it would be here. This is about 41 to 42, and it runs right up with these lines here, which again, just a couple dollars above it. And then really, once you get there, there's nothing that could be resistance for this until you reach the 200-day moving average, which is this yellow line running across here, okay? That's the big resistance, and that's all the way up at $50 a share. If it could get there, that would be a real tough resistance area. Technology's having a bit of a run right now, the past couple of days. I mean, this thing's down 50% year to date, It's up 13% over the past week, up 10% today. Earnings are coming up. The big question here for earnings, it's about 18 days away, so just over 2 weeks away. Earnings, it's not really, for me, whether or not they beat their EPS and revenue. If they can come close to EPS and revenue, that's a good thing. If it can beat it, sure, that's okay. The biggest thing to watch, though, is going to be, what are their projections for the following quarter? What are their projections for the year end? That's the big question that needs to be answered. Unfortunately, we're heading into phase 2 of this bear market, and phase 2 is not going to be pretty. A lot of companies are going to get squished and just stepped on and pushed down because the economy is slowing. So you have the technology company right here. Earnings are coming up in a couple of weeks. Our phase 2 of our bear market is an earnings bear market. And that's where companies report. Maybe they did good on their EPS and revenue, but their projections, they're going to have to lower them. They're going to have to bring them down or revise them lower. And that's never good. And that will cause the stock to drop. So this big run today, I don't know what particularly caused it. Was it just the market was running, so it did too? Or if there was particular news about it. So they provide cloud and software platform. All right. That will definitely be something that needs companies will need. They opened a new cloud facility. When was this? This was June 2nd. That's a long time ago. So looks like it just ran because the market ran. That's what it seems like here. All right. So this is getting a bit extended. So what I would say is I wouldn't be surprised for a Friday pullback on this one, since it did run 10% today. And that's a big move. And when you look at this history, the recent history within this wedge, that doesn't happen very often, that it moves 10%. It looks like they're typically smaller days, maybe 4 or 5% on average. All right, so those would be my target areas. Number one, it is sitting at a target right now, right at 39 to 40. That could act as resistance, and then we could see a sell-off tomorrow. That's probability number one, and I'm probably leaning towards that probability. Probability number two is that it breaks that little bit of resistance there. It can head higher than where it did back at the beginning of June. And then its next area is going to be, $41, $42 a share. That could stop it. And if it does somehow manage to break above that over the next, few days, few weeks, then that 200-day moving average, that's the real target for this to reach if it can run. Earnings could take this and just turn it on its head. And then we'd be looking for, all right, how much lower can this go? So if we look back for support, because this will go lower, absolutely, I'm almost positive on that. If we line up the two bottoms that it had here recently, let's get that highlighter back on here. These two bottoms right here, they're right about $32 to $30 a share. And that does line up with this low back here that was caught. And of course, it lines up with that support right there, and then that resistance zone right there. So there is price action at this area. And then if we throw on our volume profile, you can see here, there is good volume right here. And this is right between, let's call it 47 down to 42. And that's the zone, once you break that second area going up to the 200-day moving average, That's this zone right here, okay, from the 200-day moving average. So there's a lot of buyers who would step in there, and that also matches right up with this whole area right here. So why am I pointing this out? Because this is an area where people would sell. This is an area that if the stock could get up to $43, run up to the 200-day moving average, somewhere around $47, $48, there will be sellers stepping in because they got trapped in right here. And then not to mention the sellers that trapped in at the top up here who are just waiting to exit their position. Then on the downside, we have a huge volume bar right here at about $20 a share. So there would be a lot of buyers stepping in at $20 a share to scoop this thing up. All right, there's the technical analysis there for ticker symbol XALX, Calix. All right, so we should keep moving on. I love your questions. Any other questions, just feel free to plug them in, and we will dive into them. All right, just want to clean this strip a little bit so it's not so messy the next time that we come here. All right, awesome. So let's wrap this up. And again, if you have any questions, just leave them in the comments and we'll go over them. All right, going back to the S&P 500. Tap the wrong button there. Okay. All right. Okay. Just getting the chart set here. I do want to talk about Matterport real quick. That's the next topic that I want to go on. Just real quick. Matterport, ticker symbol MTTR. It's a company. I like them. I don't think they reached their full potential during the pandemic. I mean, they could have really grown as a company because they were set up perfectly for the pandemic. They're down to a $4.23 a share stock right now. They're up 9.8%. That was a big move today. And they're making acquisitions. So Matterport in the after hours announced that it bought VHT Incorporated, known as VHT Studios. It is a US-based real estate marketing company that offers brokerages and agents digital solutions to promote and sell properties. So with this acquisition, I think that Matterport is aiming to increase the adoption of its, quote, digital twin technology and further expand into the real estate industry while adding marketing services for other key markets, such as we got commercial real estate, we got travel, we got hospitality. We could even throw retail in there. All those different sectors now Matterport can go after. Now, the terms of the deal were not disclosed at this time, so we'll have to wait for further information to see how this plays out. But it's good news for Matterport. It's a company, it's got great potential. Even for the metaverse, Matterport can have a role in that. Creating digital twins. That means you have a real-life building, and then you have a digital copy of that building, right? We've all seen virtual tours when we're looking for homes, right? Looking to buy a home, those virtual tours, those are Matterport. It's a beautiful, beautiful digital twin that it can create. But that's the latest news for Matterport. I like this company. I like this company. The stock's not doing so good, but I still like the company, and I'm still watching it, right? All right, next one up real quick in the news in the after hours. Twitter, TWTR, is the ticker symbol for Twitter. Now, it is down lower, about 4% lower in the after hours. after it was reported that Twitter laid off about 30% of its talent acquisition team. And that's according to the Wall Street Journal. And then, according to the Washington Post, Elon Musk's bid to buy Twitter is, quote, in jeopardy. In jeopardy. Helping to push the stock, down that 4% in the after hours. So just wanted to point that out. That's why Twitter's dropping. I know there's a lot of eyeballs watching this story. Okay, let's get into the broader market here. The stock market was looking to keep the momentum going from yesterday, and it sure did. The market opened on a higher note. Now, we can look at this. I'm going to go to the 15-minute chart just real quick here so we can see this. Over the past 3 sessions, we can see something forming. And let me just highlight those 3 sessions there for you to make it really clear. We have this line going for us right here. Doesn't that line look really, really good? That's what we need to see to keep this. We could call today a follow-through day because we followed through from yesterday, right? Yesterday's close, we gapped up overnight, and then the first 15 minutes of trading, the S&P 500 was up 1%. That's incredible. That's a big bullish move. Now, the market opened higher here, as we can see, and it built on the gains from each of the 3 main indices. All of them gained at least 1% at the close. If we look at this, S&P 500 close 1.5%, Dow Jones up 1.1%, NASDAQ up 2.1%, Russell 2000 up 2.4%. And it was one that was down yesterday, so small caps did real good today. And if we look at Bitcoin, up 5.8% today. Ethereum up 4.4% today. Ethereum was also up between 4 and 5% yesterday. So we've got good gains going right now in all the indices and in crypto, right? So it's looking good. Now, with the 1.5% gain, the S&P 500 closed above a very critical level, 3,900, which is what I called for yesterday, 3,900 to 3,910. That's exactly what I said in yesterday's live stream. You can go back and watch it if you don't believe me. But that's where we landed, in our zone there. So what's next? Is this rally going to continue? Well, the seasonality of investing and of the S&P 500, the Dow Jones, the NASDAQ, et cetera, they all have a rally mid-July to the first week or so in August. Seasonality. There is a rally that forms around this time of the year. So, at least on the face of that, we could continue to see this rising. Now, realistically, let's dive in and look at a key area here. I'm going to go back to the daily chart to look at this. Okay, let's open this up a bit. I need to take that highlighter off. Okay, so for the S&P 500, first thing, volume down here at the bottom, down here. Volume is going down. We had lower volume today. As a matter of fact, the past 3 sessions, volume is declining. We don't want to see volume declining. We need to see volume shoot up because that's going to give us the momentum that we need to break these key areas of resistance. Now, why did I say 3,900 to 3,910? It's simple. Right here, these 3 candles, they will, and they did, act as resistance for today's candle. And the top of that is about 3,910. So that's where the number came from yesterday, 3,900 to 3,910. So what are we looking for next? Well, next, we have, and let me get those two highlighters off of here. Next, we have this move right here. Straight up to this black line that's descending here. This is the wedge resistance line on the chart. If I go out just a little bit, you can see the wedge pattern right there for the S&P 500. It's also on the SPY. Now, this is going to act as an area of resistance. However, I must add that if the S&P 500 can break above this area, which is 3970, and right now we are about 1.3% away from that 370 area. About. If we can break that, there is a gap that was left right here that needs to get filled in, but it is above and outside of the wedge resistance line. Now, if we can, we really should see higher volume to break this resistance. And you can see, since that resistance line started back here in March, all the way back here in March, we've tagged it, we got rejected. We tagged it, we got rejected. We're about to tag it for a fourth time. Will we get rejected? That's the question. If we can break it, like I said, we have this gap that would need to be filled in right here, and it runs all the way across here. It starts at 3970, and it ends all the way up at 4015. Now, the 4,000 area is also going to be a tricky area for the S&P 500 to break through. And the reason I say it's going to be a tricky area is if we go back here and look, the 4,000 level, we have a line going right through here, okay? 4,000 acted as support on the left side of this line. By the right side of this line, it acted as resistance before finally getting enough momentum. Volume actually peeked its head up right here to push us above 4,000. So that's why 4,000 is going to be a sticky area to keep the S&P 500 from going above it too quickly, right? It's going to slow it down. It's going to be sticky. If we break above 4,000, and these are just different areas, right? I'm not saying that tomorrow we're going to 4,000. I'm saying tomorrow we're probably going to, if we keep this rally going, we could go 1.3% and then tap this resistance line right here. But if we break that, we then fill the gap, okay, break 4,000, then the next area of resistance, hard resistance, would be along here. And that's where from May the 27th all the way through June the 8th, there was resistance there. We were contracting at that moment. That's a big area of resistance at 4160. You can write these numbers down, plug them into your chart, and you can see the resistance areas there as well. All right, let's keep moving here. All right, so this resistance is going to be tough for the S&P. We've got some key areas there to watch. We also need volume to pop, okay? This could take tomorrow. It could take next week to break the gap, to break resistance, and then to fill in the gap, and then head to 4,000. Otherwise, if we don't break these key resistance areas, I think I just laid out 3 different areas that will be sticky for the S&P 500 to get through. And if we don't, we'll hit the resistance and we'll just start falling back down. Now, like I said earlier in this live stream, phase 2 of this bear market is happening or kicking off and starting next week. Earnings bear market is phase 2 of this bear market. And banks, financials, that's what we get starting next week. And if their forecasts are brought down, then that's not going to be good for the overall market. Now, there's a very particular place that we can look to determine where we're headed next. And right now, that's the VIX. We haven't looked at that in a couple of sessions, so let's look at that. VIX, and then you want to make sure that you pick the second one, which should be on the right-hand side. It'll say CBOE. That's the one that you want. Now, here's where the VIX sits, and this is very important. It closed today down 2.4%, and it's sitting at 26.08. Okay? 26, that's not a big scary number for volatility. No, it's not. And the VIX has been going down, and the S&P 500 has been going up. But here's the key. The VIX is currently sitting right on support. You can see that. It is sitting right here on support. This support was not broken the last time the VIX got here. The VIX actually shot back up and rather quickly. That was back mid-June, June 8th, and then it kicked off on June 9th. And if I go out a little bit further, right here, support again, and then back here where it started, all the way back on April the 4th. So this has been a very strong support level for the VIX. When the VIX goes down, the markets go up. So now that the VIX is at support, the VIX has gone up the past 3 times it's hit it. When the VIX goes up, the market goes down. So what's going to happen? A breakdown from this level would just add fuel to the current rally the S&P 500 is in. That means if the VIX breaks down through this support, that would be adding rocket fuel to the S&P 500, helping it to break those sticky resistance areas we just talked about. That's what we're watching. But a bounce off this line, so instead of a breakdown, it bounces off of that line. That would be a short-term bearish signal for the market. So watch the VIX closely tomorrow. See where it goes. Does it hold this 26 level? Does it drop down to a 25, a 24? Or does it go up? 28, 30, 32. And then we're back in the 30s, and that's typically not good for the market. That's increased volatility. Now, today, buyers showed up to support the rebound effort for this follow-through day, as evident by market breadth, right? Advancers led decliners by a roughly 3-to-1 margin at both the New York Stock Exchange and the NASDAQ. There were a few factors acting like a positive feedback loop to the buying effort. The bounce coincided with the price action reversal in energy futures and strength in the semiconductors as well, which are both held as leading indicators. Energy futures were increasing all day, but natural gas futures, they saw a very sharp upturn as the EIA natural gas inventories, they reported this morning. Now, they settled the session up 13.6%, to $6.25 per British thermal unit. Then we have oil. Let's look at that. US OIL, WTI crude oil futures. Look at this. We talked about a reversal. We talked about a bounce. That's exactly why that highlighter is there. The 200-day moving average is just under that highlighted area. WTI crude futures settled the session up 4% to $102 a barrel. Unleaded gasoline futures rose 7% to 3.68 or $3.68 a gallon. Then we have copper, another leading indicator. You can look at copper, just spell it out, COPPER, right? And then we have a couple to choose from. You want to make sure that it's at least US based. So we can come down here and you can see the big rally today in copper. Copper is used in everything. All the chips, semiconductor stocks, they need them. Electric vehicle stocks, they need them. Computers, they need them. Microsoft, our smartphones, everything needs copper these days. That's why it's a leading indicator. Copper has been sinking hard, but it was up 3.5% today to $3.55 a pound. It's down just slightly now in after hours. And then we can look at semiconductors because they had a really, really good day. Let's look at the Philadelphia Semiconductor Index. SOX is the ticker symbol for that. I use the second one. On the right, it says TVC. Press enter. The Philadelphia Semiconductor Index closed up 4.5%. That was a big jump, a gap that it left, right? And we know all gaps must get filled. And this gap right here, we'll have to address that on a later date. But it jumped today. Every index component in the Philadelphia Semiconductor Index closed in the green, with the biggest gains on semi. One of my absolute favorites. We talked about it a few live streams ago. Ticker symbol ON, for ON Semiconductor Corporation. They were up big today, 9.2%. Again, they left this big gaping hole, which we'll have to talk about on a later date, right? But nice move there after this big decline that it has been on, going back to June 6th. So nearly the entire month of June. We can look at NVIDIA, NVDA, and see how well they did. They had a nice day as well. They left a gap right there. They came right off of this interesting line, right? This very interesting line that is going down and to the right here. It acts as resistance at times. It acts as support. This time it acted as support. As I bring that up, you can see right there, it bounced right off of it. Real nice move. So NVIDIA, no longer in my buy zone, but that's okay. I think it will come back down. I'm not worried about that one at all. Look at AMD. I didn't look at it very much today. There were so many other things firing off. AMD was up 5% today. So every component was green. That's really good. And then if we look at technology, okay, a ticker symbol to use for technology is XLK. XLK. You can use that. It's the Spider Select fund for technology. This is what you can use to track technology as a whole. And technology had a great day. As a matter of fact, I want to show this. It was up 2% today, down 10% in the after hours. Technology is one that has been hit hard all year long. But I want to show you this over here, this image. This is the XLK, the black line on the top, right? You can see how it rose and rose and rose, and then 2022, boom, it's been coming down. Now, the blue line at the bottom, it tracks whether insiders, executives, you got your CEO or your CFO, it doesn't matter. If they're a high-level person at a technology company, they have to report when they buy and sell shares. So this blue line is tracking the buy and the sell of that. And what do we have? When it's down towards the bottom on the red line, that means there's more selling going on. When it's up at the green line at the top of this, that means there's more buying going on. The red circle is where we are right now. That's where we are right now. So there's quite a bit of insider buying happening at technology companies right now. Now, what could we, or maybe I should ask the question, what do they know that we don't? Well, quite frankly, it's probably as simple as most technology companies have been beaten up, oversold all of 2022. So executives at the company see an opportunity to buy, and an opportunity to buy their company stocks they have been doing. With these companies being down so far this year in 2022, it doesn't really matter when you're buying them. If you're a long-term investor, okay, I'm not talking about the trader, because when you're trading versus you're investing, that's two different mindsets. I'm talking about the long-term investor right now. Buying now versus buying at the next bottom, which could be in 2 weeks or 2 months, it really doesn't make a big difference. When you're looking at 10, 15, 20 years down the road, if you are a long-term investor, you're buying this for your future, then it doesn't matter. Let me hop back over here, and I'm going to go to onsemi because I really like that company. If we look at this, right, over the past, let's get it in here. I want to get the 2019 in here as well. Takes a second to load. There's 21, so we're almost to 19. There we go. If we look at the 2019 highs, not quite there. Sorry, lagging a little bit. My apologies. Right here, this is the 2019 high area right here, okay? As long as, or I should say, if a company has pulled back to their 2019 pre-pandemic level, which for onsemi would be about down here around, what is this? About $25 a share, which would basically be a 50% drop from where it is right now. Amazon is an example of a company that is now down to its 2019 levels. See, there's a 2019 theory out there that says that some of these companies that were really big during the pandemic, they're going to come back down to those 2019 levels. And some companies have already done that. But what I'm pointing out here is that it doesn't matter whether you are buying at good areas of support, like for onsemi, a really, really good area of support is a zone between $43. As a matter of fact, let me do this a different way. I'm going to do this a different way because $43 is a great zone. So I'm going to go ahead and put that zone on here. And that zone matches up with these couple of peaks back here, going back to 2021. So if we look at this area right here, it's from $40 up to $45. Okay. That is a sweet zone. On Semi gets down into that zone, and I myself am a buyer. That should be good support. But the point that I'm making is, even if on Semi comes down to that perfect zone that I have set up, that I would add shares in this zone, because I'm long term, it doesn't matter if I buy it when it's in this zone or if it dips down to another area a little bit lower. As long as right now I'm not going all in. And that's what I said at the very beginning of this live stream with Bitcoin and cryptocurrency. Just don't go all in. Position size right now, keep them small, take little nibbles when they hit your areas of support. The areas that you have found on the chart that you think should be good support areas, nibble at that point. If it breaks it, that's okay. You didn't go all in. Take another nibble when it gets down to that next area where there should be good support. Okay? And as long as you're with a company that you've looked into, you feel comfortable with, you think it's a winner, then you're doing all the right things. It's just that we're in a bear market and things are going to act differently than how they did over the past 2 years since the 2020 bottom in March. But once you do your buying, as it drops to these support levels, and 20 years from now, it's going to look like this on the chart while the stock is like this. I hope I'm getting the point across. And this is for the long-term investors today. I talk a lot about traders every day. Today, I wanted to focus a little bit more on the long-term investor. I don't want you to get discouraged when you find a area of support and you take a nibble and then the stock falls further. It's okay. It's okay. Small position size. Oops, I don't want to take that off. I want to leave that there. And you'll be okay. All right, let's keep rolling on. I want to talk about the S&P 500 sectors here real quick. We're almost done. We're almost done. Let's pull the sectors up here, and you'll see all of them, except for one, is in the green. So 10 of the 11 S&P 500 sectors did close in positive territory today, with one lone sector being left out, and that was utilities. It was down 0.1%. Now, fellow counter-cyclical sectors, consumer staples and healthcare, they both closed in the green by 0.1%, trailing behind the broader market. The top performing sectors were energy, up 3.5%. I'm glad we got that bounce today for energy. It was looking like it was needed, and it was right there on that 200-day moving average. We saw it dip below that yesterday. Now, what we said yesterday during the live stream, I said, this is what a reversal candle looks like. And what happened today? We got a reversal. All right. I just want to take a moment there to say to myself, good job. Because I don't always get them right, but I did get this one right. That was a reversal candle. So energy up 3.5%, consumer discretionary up 2.5%, technology up 2.1%, and communication services up 2%. Now, despite the bounce, the 2-10 spread remained inverted. The 2-year Treasury rose 9 basis points. US 0 to Y, take you right there. It rose 9 basis points to 3.03. That's where it closed. It is down slightly from that. It is using the 50-day moving average right here as resistance. Also, there is a line right here that has caught support, has been resistance before, and it is now finding itself as resistance again. And that line is 3.06. Now the 10-year. Let's look at the 10-year. US 10Y. The 10-year rose 10 basis points to 3.01. It's down a little bit to 3% even right now in the after hours. It too has run into its 50-day moving average, and that is a resistance area right here. Okay? So it's in resistance too. All right, let's look at some of the economic data that we got today. All right, and this affected the markets today. Let me pull up the S&P 500. I'm going to go to the 15-minute time frame. And we talked a lot about different areas for the S&P 500, but I just want to focus in on today, okay? Because the economic data that came out today, it did affect some of this, some of the movement in the market. So weekly initial claims, 335,000. Expectation was 334,000. So a little bit bigger than expected. And then weekly continuing claims of 1.375 million. So 1.4 million, and we have over 11 million jobs open and available. The key takeaway is that claims have spent the past few weeks in a narrow range, suggesting there is little room left for improvement. What does that mean? That means the unemployment rate is as low as it's going to go. And from here, it will only move higher. It may take a little time here at the bottom before it does start going higher. But looking at the data, that's what's left. Then we got the May trade balance. Negative $85.5 billion. Why is our trade deficit negative? Expectation was negative 84.9 million. So it was even bigger than expectations. The key takeaway here is that the deficit with China, it did decrease by 2.8 billion to 32.2 billion. Though this was largely due to reduced manufacturing activity as China implemented coronavirus lockdowns. All right, looking ahead to tomorrow. All right, tomorrow's Friday, last day of the week. Yep, this was a short trading week. We already talked about earlier the key levels that we're looking for the S&P 500 and where this market could be going. Tomorrow, market participants will receive the following economic data. At 8:30 a.m. Eastern, we get the June non-farm payrolls. Expectation is 250,000. Prior reading was 390,000. Non-farm private payrolls, expectation is 275,000. The prior reading was 333,000. Unemployment rate, the expectation is 3.6%, the exact same that it was last month. Unemployment rate, 3.6%. Then at 10 a.m. Eastern, we get the May wholesale inventories. Prior month was 2.2%. And then at 3 p.m. Eastern, we get the May consumer credit. Prior month was $38 billion. How much higher is that going to go? Because we all know that consumers, probably not most, but many, have already run through their savings account and now they're starting to use their credit cards. So this number will go up, and that's just a sign of a weakening economy. So 3 p.m. Eastern, if that number is way off to the upside, then that could cause markets to maybe start selling off a little bit. Okay? All right. Do me a favor, if you could please, and click that like button, share this video with a friend, and join us in beating this crazy market by clicking the first link in the description. We'd love to see you there. And if it's your first time watching, click subscribe. All right. It's a Thursday night. Thank you for your questions. I greatly appreciate them. Would Tesla's earnings be impacted by their Bitcoin holdings? The quick answer is yes, it could be because it's a loss. However, the way financials are done, that is not a realized loss. It is only a paper loss, okay? So it should not show up and affect EPS or revenue. Not until it becomes realized gains or losses. Right now, again, it's only paper, okay? So they haven't lost anything or gained anything at this moment in time. Not until it becomes realized. All right, hope that answered your question. I greatly appreciate the question. And I'll go ahead and wrap up the video here. I'll be back here tomorrow after the market has closed to dive into what happened in the market, why it happened, and what to expect moving forward. I hope you enjoyed it, and I'll see you in the next video. Take care.